Welcome to the deep dive.
Yeah.
So if you've been navigating the daily drama of index options lately, those really whiplash moves and the whole race against the clock with daily expiry, probably looking for something, well, different.
Yeah, something with maybe a different rhythm.
Exactly.
Yeah.
So today we're diving into the world of crude oil trading on the multi-commodity exchange, the MCX. Our intel comes from a pretty interesting YouTube exploration by someone called Aishan Trader.
It's a conversation a lot of you listening have likely thought about, I bet, even if you haven't actually, taken the plunge yet. That constant pressure from daily index expiries can feel like walking a tightrope.
Definitely.
So exploring a market with different characteristics, like MCX, crude oil, it just makes a lot of sense.
Absolutely. Crude oil on the MCX, it operates on its own schedule, responds to a pretty distinct set of fundamental forces, and the trading hours might actually surprise you. Our mission here today in this deep dive is really to extract the core knowledge you need to understand the basics. We'll try to pinpoint what makes it different from index trading and guide you to the essential information you need to, well, start wrapping your head around it. Okay, let's unpack this.
Right. So the first misconception to clear up, and the Aichin Trader video hits this straight away, is about when you can actually trade this stuff. A lot of people might just assume it's the standard 9 a.m. to 3:30 p.m., like the stock market.
Yeah.
But that's just not the story of MCX crude oil.
Nope, not even close. And here's where it gets really interesting, especially if your daytime hours are already, jammed.
Yeah.
Crude oil trading on the MCX runs from 9 a.m. all the way to 11:30 p.m. Indian Standard Time.
11:30 p.m. Yeah.
That huge window could be a significant advantage for many of you. But does that longer session also maybe introduce different kinds of risks, with global events unfolding while MCX is still open?
That's a really good point. It's true. I mean, overnight global news can impact the market when it reopens. But the flip side is those extended hours also allow you to react to some of those events within the same trading day,
Ah, okay.
which could potentially reduce some of that gap risk you might see in markets with shorter hours. Now, let's get to the heart of what really drives crude oil prices. Unlike indices, which are, a blend of many different sectors, company performances, all that.
Right, lots of moving parts.
Yeah, crude oil's price movement is mainly about a more direct equation. It's the balance of global supply and demand.
Makes sense, right? If more people and industries want oil than is easily available, prices generally tend to go up.
Mm-hmm.
Too much oil just sitting around in inventories, less demand, prices probably fall. It's a straightforward principle, really. But understanding the why behind those shifts, the supply and demand shifts, that's where the real insight is, I think.
Exactly. And this is a crucial difference from how many might approach index trading, where, maybe price action charts are the main focus.
Yeah. Right, just looking at the patterns.
While technical analysis still has its place in commodities, for crude oil, keeping a really close eye on news and global events becomes absolutely vital. Just relying on pure price action alone, it simply won't give you the full picture. It's fascinating how, geopolitical events can almost instantly ripple through that supply-demand balance.
So if we can just lean only on charts, where do we find reliable info? The Action Trader really emphasizes how critical news is for moving crude oil prices. And he points us to a fantastic and, importantly, freely available resource, the OPEC monthly report.
Oh, yeah. This report is, it's an absolute goldmine of information. Just doing a quick online search for OPEC monthly report will get you right there.
Okay.
Now, the whole report is pretty comprehensive, quite long, but even if you don't have time to read it cover to cover, there are definitely key sections that offer immediate value.
Think of it like getting the inside scoop on what the big players, OPEC, are thinking and seeing, right?
Pretty much.
The report gives you their analysis of recent crude oil price movements, their own in-depth perspective on the global economic outlook based on their own research and data, mind you.
Yeah, their own economists.
And detailed projections for world oil demand and supply. For instance, you should pay close attention to their revisions in demand forecasts. Those can be leading indicators, potentially, of price swings.
Good point.
Like a significant downward revision in expected demand, even if current prices seem stable, could maybe signal a more bearish outlook down the line.
Absolutely. And what's particularly insightful is understanding how OPEC itself, the Organization of the Petroleum Exporting Countries, directly influences the supply side.
Right, they control a lot of the taps.
They do. Their regular meetings involve these crucial discussions, decisions about production quotas for their member countries, big producers like Saudi Arabia. These decisions are often based on their forecasts for global demand, and they even take into account seasonal factors like more travel in summer or heating needs in winter.
Interesting. And it's not just about the planned production cuts or increases, is it? Geopolitical events can just throw a major curveball into that whole supply equation.
Oh, definitely. Wars, disruptions to key shipping lanes like the Suez Canal or Strait of Hormuz.
Yeah?
These kinds of events can have an immediate, sometimes huge impact on crude oil availability and therefore its price. So, yeah, staying on top of these fast-moving geopolitical developments can be tricky.
For sure. The IG trader also suggests maybe a potentially faster way to get immediate updates, though, with a word of caution. He mentions Telegram groups, saying he shares news in his own.
Right, social media updates.
Yeah, well, they can offer quick info. You absolutely have to verify anything you see there with reputable news sources first. Don't just trade off a Telegram message blindly.
Very important caveat.
Mm.
Agreed. Okay, now let's maybe switch gears a bit and look at some of the specifics of trading these crude oil contracts on the MCX. One really key difference from those weekly index options you might be used to
Yeah.
is that crude oil contracts have a monthly expiry.
Ah, okay. A whole month. That's quite different. And this has some interesting advantages, doesn't it? Like, for one, the rate at which option premiums decrease over time, theta decay, time decay.
Right,
It tends to be lower, generally, compared to those weekly options that are just constantly ticking down towards zero so fast.
that slower to pay can definitely be helpful. It gives your trades more time to potentially play out. Plus, because crude oil prices are so fundamentally driven by supply, demand, global events.
The real world stuff.
Yeah, exactly. There's potentially a lower chance of those really rapid, sometimes seemingly random price spikes or drops, those traps that can sometimes happen in index trading because of things like daily rebalancing or other technical factors.
Okay. Now, when it comes to actually placing these trades, you'll obviously need a brokerage account that offers commodity trading.
Right, got to have the right account type.
The good news is most major brokers in India do provide this capability. However, there are some important little details to keep in mind.
Yes, as the Irish trader points out, some brokers, he mentions Zerodha and Angel One as examples, might actually restrict trading in commodity contracts right on their expiry day.
Oh, really? Why?
Mainly due to concerns about market liquidity getting thin as the contract nears its absolute end, makes settlement trickier.
Gotcha.
He does mention Dhan as a platform that reportedly allows trading even on the expiry day, but we need to be super clear. This is not a recommendation.
Right. Do your own homework.
Absolutely. Always do your own thorough research, check the specific policies of your broker. It's also worth noting, like, if you're looking at a contract that's very close to expiring, say it's late November, and you're looking at the November contract,
Yeah.
your broker might not even let you start a new position. They might automatically push you towards the next month's contract, December in this case. So understanding your broker's rules around expiry and these contract rollovers is really essential. Avoid surprises.
Definitely good to know beforehand. Okay, moving on to maybe when you might actually consider trading. The Asian trader shares his preferred window for crude oil,
Yeah, he has a specific time frame he likes.
which is generally between 5 p.m. and 10:30 p.m. Indian Standard Time. His thinking is that this time frame could align with maybe increased participation from individuals after the regular work hours are done.
Makes sense. People finishing their day jobs and then looking at the market.
So if you're thinking about exploring crude oil trading, the first steps are pretty straightforward, right? Open a trading account with a broker that offers commodities,
Mm-hmm.
and then make sure you actually activate the commodity segment within your account settings. Sometimes it's not on by default.
Good point. Might need an extra click or form.
Once you're all set up with the account, the next logical question is, okay, how do you actually approach trading this? The Asian trader really emphasizes that analyzing the news is the absolute cornerstone.
It's foundational for him.
Yeah. It's all about gathering and really understanding those relevant news catalysts before you even seriously look at a price chart. Like, if the OPEC report forecasts a big jump in demand.
Then you look for chart setups.
Exactly. Then you might look at your charts for potential trading opportunities that actually align with that bullish news outlook.
Okay. And when he does analyze charts, what's he using?
He primarily uses a combination of time frames, a 1-hour chart to get a sense of the broader trends, the ones that reflect those fundamental demand and supply dynamics we talked about.
The bigger picture.
Right. And then a shorter 10-minute chart for potentially finding more precise entry and exit points for his trades.
Makes sense. Higher time frame for direction, lower for timing.
He also talks about identifying potential levels where the price might find support bounce off or encounter resistance where it might stall.
Hmm.
He gives an example of a past price range, say, where a level like 65.80 had previously acted as a selling zone.
Okay, historical levels.
Yeah. By looking at where the price has reacted in the past and then layering in the current news flow, he tries to gauge the sort of prevailing market sentiment. Like, are buyers showing willingness to step in and buy at higher prices based on the latest positive news? Or are sellers defending a level because the news is maybe bearish?
Right, combining the technicals with the fundamental news. It's also interesting how those seasonal factors we touched on earlier, winter heating, summer driving,
Yeah, those cycles.
they can also influence trading decisions or biases. The expectation of higher demand for heating oil in winter or gasoline in summer can definitely shape how some traders lean.
And generally, the Alaskan trader mentions having a tendency, maybe a slight bias, towards the put side betting on prices going down.
Oh, interesting. Why?
Well, based on the general understanding that lower crude oil prices can often be a positive thing for the overall economy. Cheaper energy stimulates activity.
Ah, okay. That's his rationale. Now, for those folks curious about options, are they available?
Yep, crude oil options are indeed available for trading on the MCX. You can typically find the option chain just by searching for something like crude oil option chain MCX India on your broker's platform or a financial data site.
Okay, standard option chain access. And presumably, the same fundamental forces, supply, demand, news, drive the options prices too.
Absolutely. The same fundamental drivers are at play. Understanding those underlying forces is just as crucial whether you're trading the futures contracts themselves or the options on those futures.
Right.
You can get a sense of maybe market expectations or implied volatility around a certain price by comparing the ask prices of calls and puts that are close to the current market price, the near-the-money options.
So looking at the call versus put prices at similar strikes.
Yeah. Like if the ask price for a 6,400 call is way higher than the ask for a 6,400 put, it might suggest the market is expecting more potential upside movement, or at least pricing in more risk for call sellers.
Interesting. And ultimately, the choice between, say, selling options to collect premium
Yeah, benefiting from time decay if the price stays put.
or buying options for potentially bigger percentage gains, but also with higher risks.
And faster time decay working against you.
Right. That choice, it just comes down to your individual trading strategy and your personal comfort level with risk, doesn't it?
Totally. Option buying and selling are very different games.
Hmm.
So, okay, let's try and bring this all together. Our deep dive into MCX crude oil trading, based on the Ocean Trader's insights, shows it's a potentially accessible market, definitely with its own unique characteristics.
Uh-huh.
Those extended trading hours are a big one, could be a real plus for many of you. The absolute key takeaway here seems to be staying informed through news analysis.
Who's news?
Yeah, with that OPEC monthly report being a fantastic free resource to really tap into. Remember those monthly expiry cycles? That's a significant shift from weekly index expiries.
Big difference.
And those trading timeframes that some traders find effective, particularly that evening window, maybe 5 p.m. to 10:30 p.m. IST.
Right. So this has really been a foundational overview, just drawing out some of the core insights from the source material. We definitely encourage you to explore those information sources, like the OPEC report, further.
Yeah, do deeper yourself.
And perhaps even consider some paper trading first, practice without real money just to get a better feel for how this market moves, its dynamics, before you even think about committing any actual capital.
Always a good idea.
Yeah.
And with that in mind, here's a final thought to maybe get you thinking. Given this complex interplay of geopolitics, economic forecasts, even environmental policies constantly influencing crude oil prices,
Yep.
how might significant, maybe rapid shifts in global energy policies think about a faster than expected move towards renewables?
The energy transition.
Yeah, how might that ultimately reshape this entire market in the long term? It's a fascinating and potentially really transformative question to consider. Thanks for taking this deep dive with us today.